Hey, how's it going, everybody? Mike Weber here, your Los Angeles real estate broker. And today I wanted to share some information that I learned today at Keller Williams Mega Camp. Keller Williams Mega Camp is one of two massive events that Keller Williams holds annually. Of course, they used to be in person, so you used to have to fly out, and get a hotel to attend the events. But now they're doing them virtually. But they're amazing events. One of the things that Gary Keller does, one of the founders of Keller Williams, which is now the largest real estate broker in North America, is that he kind of does like a state of the market address towards the beginning of the event. And they really dive in pretty deep on a lot of the economic data affecting the market, kind of what their insights are. They have tons of economists and people working on all of this information. And so they kind of give us a feel of what they see coming, in the relatively near future. And so one of the kind of main ideas that they talked about today was the idea of having a K-shaped real estate market, into 2021 and beyond. And so really the idea stems from the fact that a lot of people at the bottom end of the income earning spectrum are being disproportionately affected in terms of job losses and unemployment as compared to the people at the upper end of the income earning spectrum, which makes sense because, a lot of the sectors that are currently being affected by the lockdowns and by COVID are like hospitality jobs, restaurant jobs, entertainment jobs, things like that, which tend to be, hourly jobs that don't pay nearly as much as professional services, legal services, accounting, all those kinds of things. And so what we're seeing is that the unemployment rate at the lower end of that earning spectrum is in oftentimes more than double the unemployment rate for the upper end of the spectrum. And it actually matches kind of what we're seeing in the market very closely as well, which is the demand for single family homes is stronger than ever. The supply is very low and prices are still rising across the nation, except for a few small specific markets like New York and maybe San Francisco. But in general, across the nation, we're seeing prices rise, inventory low, and strong demand for housing right now, which means a lot of people that still have the means, still have the income, still have a job, are able to continue purchasing those houses. Now, of course, the low interest rates are helping as well. But when you look at what's happening in the multi-unit apartment space, that's where you're seeing a very large percentage of people that have stopped paying their rent payments. And so the number of people that have stopped paying their rent payments nationwide is much, much higher currently than the number of people that are delinquent on their home mortgage or that have went into forbearance so far, at least as of right now with the data that we have. So the idea is that as this continues to unfold, as these eviction moratoriums end, at the end of the year or early next year, we're going to start to see a lot of pain in the multi-unit space. So 2 units, 4 units, 10 units, 15-unit buildings, which right now are not coming on the market because landlords really can't do anything because, it's very difficult for a buyer to finance the property. If a tenant, is not paying their rent, the landlord can't pursue eviction or get them out of the property. So this is really preventing a lot of sales from kind of hitting the market. So the thinking is that if the job losses and the economic damage stays the same as what we're seeing right now, that being that people at the higher end of the earning spectrum continue to maintain their jobs at current levels, and people at the bottom end aren't able to get their jobs back or get another job, which is very likely towards the middle of next year, what's going to happen is that a lot of those owners of those multi-unit properties are going to want to get those properties on the market, get them sold as they can free up those units, pursue some of those evictions, before prices come down in that space, before rents start to fall in that segment of the market. So some pretty interesting information. They really dive in deep, with all the data and, certainly a potential outcome. I mean, it, certainly makes sense based on what we're seeing now. Obviously, a lot can change between now and next year, middle of next year. So we'll have to follow it closely. If I can help you guys with anything real estate related anywhere here in the Los Angeles area, definitely give me a shout. And yeah, if you find these videos useful, click the thumbs up, give me a subscribe, and leave some comments down below for me. Appreciate you guys watching, and we'll see you on the next one.